This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at key events for investors and traders. Stocks are exploding to new highs as investors look forward to a second Trump administration. The S&P 500 surged 4.7% between Friday, November 1st and Friday, November 8th. It was the biggest weekly gain in a year, sending the index above 6,000 for the first time ever. The Dow Jones Industrial Average hit a new record above 44,000, and the Nasdaq 100 cleared 21,000. Banks, small caps, steel makers, consumer discretionaries, and industrials led the surge. Those companies are viewed as potential beneficiaries of the incoming administration. Investors think Trump will loosen regulations on banks, letting them boost dividends and buybacks. Small caps and steel makers could gain along with a stronger domestic economy. Tesla helped power the breakout after CEO Elon Musk closely allied with Trump. His electric car maker had its best week since early last year, regaining a market cap above $1 trillion. Tom Lee at Strat told CNBC on Friday that a lot of money was taken out of the market because of uncertainty around the election, and now it's coming back. He added that there could be more upside, including a potential move to 6,700 next year. Lee expects small caps to outperform the broader market by a wide margin. The Federal Reserve cut interest rates by 25 basis points. The target rate is still about 200 basis points above inflation, which suggests the central bank has potential for further easing. That, combined with euphoria around the election, may reduce the importance of the Fed as a news catalyst in the coming months. Attention may instead focus on changes in Washington. Aside from the reaction in the market, there could already be signs of optimism growing. The University of Michigan's Consumer Sentiment Index rose more than expected to its highest level since May. The expectations subindex reached the highest in over 3 years as Americans felt better about their finances, income prospects, and business conditions. The yield on the 10-year Treasury note dropped for the first time in 3 weeks. That's potentially important because the increase since mid-September caused worries about higher borrowing costs. The yield is pausing at a potentially key level from 2008. It's also forming a potentially lower high relative to April that could make people wonder if it's peaked, which could potentially support risk appetite. Nearly 4/5 of companies in the S&P 500 climbed last week, including all 11 major sectors. AXON Enterprise led the index with a 42% surge last week. The supplier of police equipment, like taser stun guns, has pivoted to cloud-based services, including AI for law enforcement. Profit, revenue, and guidance were higher than expected. AXON also had its biggest weekly gain since 2008 and is the fourth best performer in the S&P 500 this year, according to TradeStation data. Palantir Technologies beat estimates in its first quarterly report since joining the S&P. The software and AI company is now firmly above its previous high from January 2021. EPAM Systems and Trimble Navigation also climbed after announcing results. Last week additionally saw dramatic rallies in newer stocks outside the S&P 500. Many are smaller growth companies that went public this decade and are now returning to levels from the onset of the last bear market. AppLovin helps mobile app developers grow their products and reach more users. It jumped 77% after beating estimates and is up more than 600% this year. If AppLovin were a member of the S&P 500, it would rank in the top quarter based on market cap. Doximity provides cloud-based office services to doctors. It rallied 38% on strong results and guidance. The stock is now back to its highest level since February 2022. IonQ develops quantum computers with ionized atoms instead of traditional circuit boards. It surged 67% to a 3-year high after revenue beat estimates. Toast provides software and payment services to restaurants. It advanced 21% last week after earnings shot past consensus. Most of last week's big decliners, like Celanese and Match, slid after reporting numbers. The worst performing group overall was Solar Energy. Those stocks are considered less likely to benefit from a Trump presidency. Precious metals also slid as fear subsided. And now let's chart the market. Last week's breakout seems to confirm the powerful bull market that's driven the S&P 500 in the last year. The move followed a modest pullback to the 50-day moving average, which is potentially consistent with an uptrend. Next, 135 index members hit new 52-week highs. That's the most in over 3 years, according to TradeStation data. Oscillators like moving average convergence divergence, or MACD, and the relative strength index, or RSI, also jumped. Both had shown signs of weakening, and now their quick rebound could indicate a strengthening of momentum. The 10-year Treasury yield and CBO's volatility index, or VIX, also fell last week. That may reflect less risk. VIX might be especially important because it's still 3 to 4 points above its summer lows. Further declines from here could increase risk appetite. Next, Federal Reserve data shows money market balances up 7% from late April and 71% in the last 2 years, despite the big rally in stocks. Separate information from FINRA shows margin balances in September were 13% lower than the previous peak in October 2021. In other words, there could be significant cash on the sidelines, and not a lot of leveraged money in the market that could suggest buying power isn't exhausted. Can money still enter risk assets? That could be especially important if the VIX slides further. We'll now turn to the coming week, which brings economic data like inflation and retail sales. While those would normally be important, they can now be like ancient history because they cover the month of October before the big election. There are also a handful of earnings. Nothing important is scheduled for today. Tomorrow brings results from Home Depot and Kava. The Consumer Price Index inflation report is on Wednesday morning. Cisco Systems reports quarterly numbers after the closing bell. Thursday is busy with the Producer Price Index, initial jobless claims, and crude oil inventories. Fed Chair Jerome Powell will deliver a speech at 3 o'clock in the afternoon, Eastern Time. Disney, JD.com, and Applied Materials report earnings. Retail sales and industrial production are on Friday morning. Results are also due from Alibaba. Thanks for watching. Please visit TradeStation.com for more.